What's going on, YouTube? This is Jay, and in today's portfolio update episode, my portfolio is not performing well in this month of March. I can't wait for the month of March to be over. But with no end in sight to the war, after a month, I think there's still going to be some more downside in the stock market. But that is just going to give us some more opportunities to buy some more of our favorite stocks and ETFs. Now, I have noticed that there are some good deals out there, and some are in companies that I already hold in my portfolio. One of them is Meta, which I'm going to show you the purchases that I made on Friday. As a DC investor, I did make a larger deposit this week. I deposited about $150, and I still got to deposit a little bit more because I need to buy more SCHD after the drip is already processing in my Fidelity account. Now, let me show you, and my largest purchase this week was on Meta, ticker symbol META, and I bought $70 of Meta, picked up another 0.132 shares at a share price of $530.07. And let me know in the comment section if any of you guys are buying the dip on Meta. Then my next purchase was, of course, my one share of SCHD at a share price of $30.64, and been buying SCHD every Friday and will continue to do so for the upcoming years. And I told you guys I was going to put some money into Vici Properties, ticker symbol VICI, and I put $16 in it. So I picked up another 0.590 shares at a share price of $27.09. So as of lately in this month, I've been seeing more and more red in my portfolio. I'm losing a lot of the unrealized gains, and I'm going to show you here in the Fidelity Performance tab. And at one point, I was over $37,000 in total balance from both my dividend and my growth portfolio together. Now it's at $35,348, and I got negative 7% returns in the last month, and it's mostly because of the month of March. I'm down $2,635 just this month alone. At least in the month of February, I was up $954 in returns, which equal a positive 2.68%. But still, the month of March has not been great. And in the last 3 months, you can see that I have a negative 0.32%. And in this year so far, in 2026, I'm only up 0.38%. But then when you expand it into the last year, you can see I have an 11.2% positive return. But if you see, I have a similar scenario. This March of 2026 compared to March from 2025, which I was down 3.22% between the month of March of last year and April of last year, which I was also down 4.35%. And you guys know that there were a lot of opportunities out there. One of them was Google, ticker symbol GOOGL. And now I have over 70% in gains. We even reached over 90% in gains in my position. So I'm taking this right here, this red in March, as an opportunity. And I think Meta might be the Google of last year. Let me know in the comment section if there's any other companies that you're buying in this month. And when you open up the last 3 years, I only have a 12.5% return. I had over 40% positive returns about a month ago. And here you can see all of my holdings, and I have even more positions that are now in the red. For example, Meta, I'm down 17.6%. And Google is not in the red, but I'm down to 66% in unrealized gains compared to over 90% unrealized gains that I had over a month ago. But the pullback on these two companies is due to some legal issues. And as I've shown you guys in a previous video, Meta and Google are liable for psychological harm according to a lawsuit that was dismissed in U.S. courts. These lawsuits right now are just hunting these two companies, which are due to pay some fees, but I do believe that they will solve this issue. I don't think this is going to hurt them long term. But what I'm going to do in the upcoming weeks is I'm going to take advantage of the pullback on Meta. Since I'm down 17.6%, I'm going to continue DCAing into it on a weekly basis. And then Google, I'm keeping an eye on it. Right now it's at $274. I'm going to wait a little bit longer. I'm up 66% on the position, so I'm okay with waiting a little bit longer. But then I'm going to start deploying the cash. I got a little bit over $200 in the growth portfolio. Even though Amazon also is under $200, it's at $199. My cost per share is $200.20. I got 10.4 shares. And Amazon in the past 5 days is down 4.1%. If you expand it into the last month, it's also down 4.3%. Then in the last 6 months, down 10.2%. And this year hasn't been great for Amazon, down 13.6%. This is one company that I have a strong conviction, and I believe that in 10 years, this is going to be one of my best performers. And another one that I'm down now in the red is Vici Properties. I got 64.7 shares now with my recent purchase, which I picked up another half a share. I'm down 9.7%. And also Vici Properties is going through some negative sentiment. And here are some notes on what investors are nervous about from Vici Properties, which is they are concerned about Caesars Entertainment, which accounts for roughly 39% of its rental revenue. Reports of a potential leverage acquisition of Caesars have sparked fears of credit risk and future lease stability. And there might also be some weakness in the gaming market because analysts have flagged declining Las Vegas foot traffic, down 7.5% from 2024. There's also a soft guidance for Vici Properties with a forward 2026 AFFO guidance of $2.42 to $2.45 per share. Wall Street expectations are $2.66, but I'm okay with continuing to buy Vici Properties. I believe they're going to fix any of the issues that come across. Management has done a great job in the past few years, so I'm seeing this as an opportunity right now. And like many REITs, Vici is also sensitive to interest rates, which geopolitical issues are not helping. But on the good side, I have SCHD dividend already processing in my account. I'm at 398.5 shares. Very, very excited. Let me know in the comment section how much did you drip of SCHD. I was able to pick up over 3 shares. I'm going to show you guys later on live stream. But I'm very excited to hit my next goal of 400 shares. And I'm closer and closer to my 2026 goal of 500 shares. I'm up 13.4% in my position, which is $1,400 in unrealized gains. I have over $10,600 invested in SCHD. And I'm going to continue buying more and more every week, no matter what the share price is at. And also for any Vanguard shareholders, Vanguard announces share splits for 5 equity index ETFs later on tonight's live stream. We're going to take a look at the details and which ETFs those are. Then in my dividend portfolio alone is at $28,600. I got $2,300 in unrealized gains, which equal 9%. But let me show you the estimated yearly dividend. Now with SCHD, that drip a couple more shares and I'm closer and closer to 400. So now with the drip on SCHD and picking up more and more shares, getting closer to 400 shares, I estimate $417 on estimated yearly dividends from my SCHD position. Realty income, which I just turned on the drip, hopefully next month is start picking up more shares. I estimate $115. Main Street Capital, I also turned on the drip, and the special dividend that is paid this month is already in process to pick up more Main Street Capital shares. So right now I have an estimated yearly dividend of $60 in my Main Street Capital position. Then Vici Properties $116. I have an estimated yearly dividend of $925 from my dividend portfolio. My portfolio salary per month of the year $77. Per week of the year, $17, and per day of the year, I will receive an estimated $2.50. And guys, don't forget to let me know in the comment section which stocks and which ETFs are you guys buying on the pullback during this month of March. I am going to continue to DCA into my favorite companies like I do every week, and I might be starting a VGT position pretty soon, but in my Roth IRA, because I'm seeing a nice pullback on the share price in VGT. And please don't forget, hit the like button, subscribe to the channel. If you made it to the end of the video, don't forget to hype the video. And as I always say, I hope you enjoyed this one, and I'll see you on the next one. Thank you.